Good morning, everyone. It's Chris here from Solstice ATR. You can find me on Twitter, on the website, Instagram, and in Discord. You can DM me. This video, we will be covering quite a lot of stuff. What I want to do, look at the technical trading for the week and the outlook in the market. Remember, we use this for illustration use. We are not a broker-dealer. Past performance doesn't indicate future results, and use at your own risk. And if you need a copy, ask for permission and look at the website policy. Let's first of all take a look at the surprise who's coming to the Jackson Hole. We're going to talk in the Jackson Hole this week on August 27th. He's going to deliver some remarks about the overall economy on Thursday. This may bring a little bit of volatility in the market, either to continue higher, or we may get less assets purchased by the Federal Reserve Board, and that printing machine, I'm thinking by mid-2022 will be coming to an end unless the COVID and other stuff happens through the economy. In this video, we'll cover futures, we'll cover some fear gauge, some currencies, we'll cover Ethereum, we'll cover small cap, we'll cover large cap, we'll cover sector rotation as well as the banks and the bonds, and some equities such as Apple, Amazon, Baba, Microsoft, Netflix, Tesla, and WYNN. Remember, we are traders. From the beginning, since I started being a trader in my career, you develop a model or you develop a way to look at the market and you refine your skills in the game of trading. It doesn't mean that every time you enter a position or exit a position, you're going to always have 100% winner. But you refine it to become more confident in your trading. You commit to produce yourself a commitment. You put in the effort behind the charts and the time you spent to produce success. Trade what's given to you on the charts, not being biased to either side. That will help you trade with more confidence and have a structure for entries and resets. Let's now take a look at the combination of the three instruments out there. Small cap, I have the S&P 500, the E-mini, the Nasdaq, and the Dow Jones Industrial Average on a weekly. We can see every time we consolidated, we broke up from October 2017 throughout 2020, and this is the major reset from February 17 through March 23rd of 2020. Then we recovered, and eventually in this area, I'm going to zoom in so everyone can understand. We had the September, high reset, October, November, and this is the November high when they released the vaccine, and we continued higher. We consolidated a little bit because the outlook in the global markets was because of the shutdown and the European as well as the British exiting the Eurozone. Then eventually we had this last spike basically on a grind up. The 18 SMA, usually when we get away from it, it takes it a while to reset, but we've been retesting in the last couple of weeks the 18 simple moving average on the weekly charts. What I want to do is go to a daily chart 1 year to show you how it looks like in relationship to what's been going on in the combination of the four. Every time we ran away from the 50, we retested, continued, then we fell back down, continued, we fell back down, continued, we fell back down. In the last couple of weeks, the 18 simple moving average, every time we ran away from it, it took it less to reset. You can see here, retested, 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 retested. Here, the 50 since the June low, we had the July low, that we had recently the August low. That 50 simple moving average, in order to hold us, has to hold. If it doesn't, we'll look at the 116 and the 200 SMA. But if this is going to continue, we want to look for the outlook that this week's bar, this 2 days bar reversal, has to clear this position in order to run higher. So no bias. We trade what's given to us. Let's break it down using the Dow first, YM. And I know I have it on a daily. What we want to do is go to a little tiny, small, short time frame. Oh, we did it on the SOOPs. Let's go time frame. Instead of daily, we're going to go 9 month so we can make the charts a little bit bigger and more comfortable on the eyes. We can see since the December, we had the March low. This was the January low. And this was the February low. This is the March low. Then we continued higher. That was the before April rally. Then we had the May low. You can see it right here. Then we continued higher. Then we had the June. In this month consolidation, you can see the annual high. We created that push on a grind. Eventually, we looked up. We came back and failed. This was the monthly high, high and low. We retested it and closed right on it. This is going to be a little bit iffy because if you take a look at the weekly high and low, we measure the Fibonacci on the weekly. We know that the 50% here and the 38% is acting as support. This is an important area which is around the 34,900. Keep an open mind if we either come back, retest it and bounce off, or we clear the 35,150 area to continue higher. So have an open mind on either side for the Dow. Let's take a look at now the NQ, the Nasdaq 100. We can see in the Nasdaq 100 as well, since the February low and March, we have the May low. We continued nicely high. We reset a little bit in July. We can zoom in here. But we've been struggling in the large cap sector to continue higher. If you consider this is the shoulder, this is the head of it, this is the other shoulder. We tried to fail, but we bounced on the weekly chart nicely, on the daily chart off the 50 simple moving average and the 61.8 Fibonacci to go back to reclaim it. If this is going to continue, we have to clear the monthly Fib and go up to the monthly Fib extension. What I'm going to do is zoom in here, compress it a little bit, and you can see where the 38 is and the 61.8. If we're going to fail, we have to keep an open mind on the 50% Fibonacci. We'll zoom back in so we can see it. And we zoom in this area. We have to hold the weekly high and low. This is your 50%, and the 61 will act at 38.2 Fib. In order to act at 38.2, you have to hold this one to continue higher. If we fall back, this area is very important to hold to continue higher, or we eventually come back and retest the low side. So pay attention to large cap, tech, and healthcare sector. Let's take a look at the RTY in relationship to the overall market. The Russell has been a little bit more on the weak side, but it consolidated in the last since the January low. We had this this was the January low. Then we had the February retest in this area. You can see it. That was the low. We have never retouched this area, and that's the annual high almost on it when we tested the December high. We retested it. We continued higher. We've been range bound in this area since February. This is very critical. We've got 1, 2, 3, 4, which is a horizontal line going across. We have to hold this area in order to continue higher. And since the beginning of this year, we never really tested the 200 SMA on the daily chart on the Russell. So since then, it reclaimed back the 200 SMA. Now the Russell, since it double bottomed here, we start counting 1, 2, 3, 4, 5. If you consider this a horizontal line, the Russell has to pick itself back up to continue back to the 38%, 50, 61, and eventually clear the top. But the monthly Fib, we can see it, the high and low is here. We have to reclaim the 61.8, which is the 38.2 Fib, then becomes the 50 and the 61 to continue higher because it's been range bound for a very long time. And a lot of people are looking at the Russell that it has fallen and cannot reclaim its strength. Keep an eye on small caps. This is the canary in the coal mine that will give you an idea what the market is going to do. And remember, on Thursday, we have Powell speaking at Jackson Hole. Let's go now look at the ES. And we can see that S&P, since the March low in February, we continued higher in May. We retested in June. This is the July area. and we bounced off the 50 SMA every time we retested it. This time, in this linear regression up channel, we had a cone, but we fell down. We retested on the monthly fib, the annual 138 fib extension to the upside, and at the same time we bounced off a smaller channel, which is a small linear regression channel in here, and we reclaimed the 61.8 fib. If I go to a 4-hour, what I want everyone to pay attention, we're going to do it on a 45-day. I do have the volume profile here. If you look at the each week's POC, these were retested. We still have that virgin control point down here and another one down here. It doesn't mean that we're going to fall back down in that area. If we can clear this linear regression up channel and the POC, will look for the upside of the upper channel. Since we are in a smaller down channel on the 4-hour, we have to keep an open mind on the 4218 area as well as the 4400 to hold us, to keep us going higher. If we fall in this area, we can fall back inside that channel to the other side, and we will lose that linear regression channel that's coming from 719 to 819. This is a month channel that's going higher, and I have the volume profile. I put it on purpose here to show you the weekly high and low in it, the value area low, value area high, and the POC in relationship to the prior 3 weeks, because we retested the prior value area of this profile from the week before. If I zoom down, we can see this was the grind higher, but the value area high, we retested it and bounced off it and took out those virgin control points, which is 1 and 2 here. Then eventually we lost this one. We have not lost this one. This is a weekly POC that's sitting down there that's holding us up so far. Let's go now. Look at it on a monkey bar. We're going to go style, monkey bars. And we can see that on the monkey bar, 3 days, that reversal down and reversal back up. The sentiment in Friday, we pushed higher. Does that mean we can hold to continue higher or retest a portion of this area to continue back up? Pay attention to what the charts offer you. Let's go back now and look at the standard candles on a daily chart. We're going to go from 4 hours and break down the rest of the instruments. We're going to go daily. We're going to go 9 month out. We don't need to go that far back because we're still looking at a little bit more concentrated area. We'll break it down one by one. Let's take a look at crude oil, CL. We can CL, from the OPEX and what's going on in the global markets. The dollar has been strengthening, and crude oil fell through that linear regression channel. There was 2 of them here that we lost, and eventually we are in a down channel. That 200 SMA has to hold us in this backside of the breakout, because this was a consolidation breakup. Come back, retest the breakout of the second consolidation. This is a very important area. You've got 1, 2, 3 areas to hold, but you have 2 in this consolidation, 1 and 2 before we went higher. We want to make sure we hold here in order to continue back up in that linear regression channel for crude oil. So let's take a look at now the dollar in relationship to crude oil DXY. You can see the dollar has created a cup and a handle, and it did another, cup inside here in this linear regression channel, and we broke 1, 2, 3 times. It's looking up on the weekly to go to the upper linear regression channel. If this hammer reverses and holds, this is continuation. But if it continues higher, pay attention to the extension 161 for a small rejection coming back in, or if it loses that 93.2. Let's take a look at now GC, which is gold. We can see gold in the last 2 weeks or weekly bar chart. We're still in a linear regression down channel, but on the monthly, we can see that we fell back down, reclaimed the 1780 area, but haven't been able in the last 4 weeks to recover above the 18 and the 50 simple moving average. This is very important area, the 1796 to 1805. In order for gold to reclaim it, pay attention. If it gets a small little handle here, breaks out, your target is the prior 1837 area of the monthly Fib high and low. We are in consolidation. Pay attention to the charts, and we retested part of the old channel from March 19, 2020 and 8/16/2020. This channel here, if you look at it, if we go back on the weekly chart on gold. Let's take a look at now BTC. I will cover BTC in a little bit more detail for you, or we can use the GBTC ETF. We can see we have reclaimed on this bar. We tapped into the gap fill right here. We filled 100% of it, so it's no longer there. We have to make sure we can clear this bar in order to continue higher. What I want to do is zoom in here and show you what it did. We basically broke out on this one when we were at the 29,000. This was the annual high. You can see 29,700. We gapped up, consolidated for a week. When we eventually broke up, we created another gap here on the 4-hour. We are consolidating, and this is another box here, which is similar to this, and we broke out of this box. In order to continue, they have to fill this gap in these two bars. If you see, then eventually, it can get to the annual high that it did prior. If this consolidation and this breakout, if institutions are going to come in and other people to drag it higher, you have to pay attention to this bar and this gap fill. Does it stay inside this gap, consolidate a little bit more, or continue higher? I can look at it on a GBTC. GBTC. It shows it because I don't have, GBTC. You can see that consolidation and the annual high. If I zoom in here, this was that little area of gap. You can see it between here and here. You see it? It still hasn't tested it. In order to break out, we can see that consolidation, break up, because if we draw a channel, down channel here, we eventually broke it, consolidated, broke up, consolidated and broke up these two boxes. In order for it to run, it has to clear this gap, come to here, consolidate a little bit, and eventually come up to the $48 in GBTC. Let's take a look at Ethereum, ETH. We can see ETH has broke out of this area. There's a small gap here. There's another one on the daily chart or the 4-hour here. It's been consolidating, trying to break out. We have to pay attention if it clears this bar in these two candles in order to fill the prior gap on the 4-hour chart to continue higher and reclaim the annual high. But we have this area that's very important. If Ethereum cannot clear this area here and these two candles and consolidate, it may come back in for a retest before continuing higher. That's on Ethereum. Let's take a look at some ETFs, and where I want to go through is some of the RSP. Invesco equal weighted S&P 500. You can see that it's trying to recover. We have the RSI, or the rate of change, is holding the midpoint of it. So in order to reclaim it, we have to clear the 18 simple moving average. And if you take the weekly high and low of this one, and we relook at it, we have to clear the 61.8. Let's take a look at the XLK. In the XLK, we can see that it reclaimed the tech sector, the annual high. As we can see, 1, 2, 3, 4, 5. If I zoom in this area, I can see that those highs were every time higher high. The only time we retested, we had a lower high is in this area. We retested now the 18, we cleared it, and we continue in higher. In order to continue, since it created an annual high, it has to consolidate or break out and can go up to the prior high. And this area has to hold the 151.50. Let's take a look at the XLV in the healthcare sector. XLV is in a similar situation, but hasn't reclaimed the Tuesday high. pay attention to it. Let's take a look at the XLF. XLF here. We can see in the XLF, we retested those three tops and we failed down here. This is in the financial sector, so we have to pay attention to the financial sector if this linear regression channel holds us or not. Let's take a look at XLU. We can see the XLU, that's the utility sector, and we can see we reclaimed the annual high and we broke out this week. Pay attention to that sector. And let's take a look at one more, XLE. I don't think I did XLE. This is the energy sector. You can see it looked up, came back down, created a, if we call this a shoulder, the head, this is a big shoulder. This is a big head. This is another shoulder. We're retesting the breakout and the gap in this area. This is very important to hold in the energy sector to continue higher. Pay attention if we can reclaim back the 200 SMA or we fall a little bit lower. We have to pay attention to inflation. Let's take a look at the /VX. In the VIX here, I have the Fibonacci's. Every time we looked up, we fell down, looked up, we fell down, looked up, fell down, looked up, fell down. This time we have, because you know the rotation in the monthly VIX, we can see usually we get gaps, continuation, then we fall. We have to pay attention to the new /VX, the one that's coming this month on the rotation. If I do the VIX, you can see the spike up and on the monthly, looked up, double topped, and eventually we fell back down. The 61.8 has to hold in order to continue higher if there's going to be volatility in the market and the change in the trend. So we looked up and we fell back down. Let's take a look at one more time the dollar. Shift. Oops. What did I do? Oops, we got something else. Okay. My fault. $, shift, $DXY. My fault. We can see on the charts we looked up, came back down, looked up, came back down. This inverted hammer has to hold in order to continue in this prior high. This is why I'm showing it, and pay attention to crude oil. Let's take a look at BANK, bank sector. Oops, BANK. This is the bank. We can see in the bank sector that we are consolidating. We're trying to reclaim this linear regression up channel. We're looking up. If I take the weekly high and low from here, we have to reclaim the 50% and the 38 in order to continue higher. Let's take a look at $DJT. That's the transportation. We can see in the transportation we have been not able to reclaim this monthly prior high. We fell down, looked up, fell down, looked up, falling down. Transportation has to get itself back on track in order to continue higher and things to move in the right direction, because we had lost the linear regression down channel from here. If I do take this channel out of the way and I put a pitchfork, remove drawing, we're going to use a pitchfork this time to show you how it looks like. Remove drawing. We go in here, we get a pitchfork. I've kind of added the extra Fibonacci's in between. We can grab this area here or this area here to show you how it looks like. We have to pay attention to that area here to hold in order to continue higher. And if it's going to reverse, we're going to look for the other side of the fence on the pitchfork. Let's take a look at now AAPL. Apple, you can see it's consolidating in the range bound in the last couple of weeks. Pay attention to the 150 area or the 145 it ends up on the other side. Take a look at Amazon. Amazon seems to be, not making any traction whatsoever. Since the earning gap, it's been falling down. We got to pay attention to this area here, this consolidation in the backside here. I think there's going to be an opportunity in Amazon in this area here around the 3,100, 3,075 area in Amazon. Let's take a look at Google. We can see in Google it's been consolidating, breaking out, like you can see it, consolidate, break up, earning report, consolidate, break up, consolidate, break up, retest the consolidation, break up, consolidate, break up, come back to retest the breakout, then push higher, consolidate, break up. This time on this small reset we had, it didn't claim much of a reset, but it continued higher. We have to pay attention to Google because this is part of the Nasdaq 100. It's got Goog and Google, which is the ABC and the other company. It has a lot of weight on the market. Pay attention to Google. Let's take a look at NFLX. You can see Netflix has reclaimed after the earning report dump. It's trying to come back and clear the prior highs. If we can break out of this consolidation here in Netflix, it gives us an opportunity to continue higher if it creates a cup and handle and breakout. Let's take a look at Tesla. Tesla. We can see Tesla has been range bound, hasn't been able to get out of its own linear regression channel. Every time it looks up, it goes almost to the top, comes back in, goes up to the top, comes back in, goes up to the top, comes back in. It retested the linear regression low, but it's holding the 50 simple moving average. This is a very important area, the 670 to 665. If it doesn't hold, you look for the backside of the prior breakout channel. If it breaks above the 712, you look for the upside because there's a little tiny gap in here. You can see it on the charts. Let's take a look at SCHA. I'm going to the Schwab ETF. So you can see that the small cap, because I didn't do the IWM, it's in a similar situation since the March and the January low. But we can see that this area has to hold in order to continue higher, and it bounced off the 200 SMA. We're going to look at the SCHX large cap. I'm going to do the large cap here in relationship. You can see that the large cap is similar to the S&P 500 sector rotation in the stock market, such as the Nasdaq and the S&P 500. And we'll go last to NYA. This represents the overall market of the New York Stock Exchange Composite. We can see that it's been range bound since April, trying to look up. It broke out of this consolidation eventually, looked up, failed, but we did hold the 116 SMA. We tested it here. We almost tested it here. We have to pay attention to the overall market to see what it's doing. Let's go back to the ES. And the last one, we're going to look at the ES. The ES shows it's way up here on the daily chart. What I want to do is go to the 4-hour chart. Looking at a 30-day range, we can see that this consolidation here, we looked lower, we retested this area and bounced off a specific consolidation of that V-shaped pattern. Then we continued higher on a grind on light volume in the last couple of days or weeks. Then here we rebounced back up. We have to pay attention to that linear regression channel to continue higher and break out of here to go back to the upper channel. If it falls, you pay attention to the 4400 or the 4398. I hope this was helpful. I look forward to seeing you on Discord, Twitter, and be safe. Take care. Over and